In this tutorial, we're going to look at the accounting for a new fixed asset and the depreciation not only in the month of acquisition, but for every month of its useful life. We're going to be using recurring journals, and it will save you an immense amount of time. We start by going to the chart of accounts because we're going to need some new accounts to do this piece of work. So we select New, and this is our new account screen. I'm going to type in plant and machinery, and then I'm going to copy just that phrase because we'll need it again as we go through this exercise. So we have an account called plant and machinery. It's a tangible asset, that's what type it is, and it's a further detailed type of machinery and equipment. So we save that. We go back to our chart of accounts, and we've done one piece. We'll now go and do the second piece. This is why I copied, so I can now paste. And this is going to be plant and machinery cost, also a tangible asset, and also machinery and equipment. But now we're going to make it a sub-account of the main plant and machinery account, and we'll see why when we come to the report at the end. So this time we do save and new, and our third account is plant and machinery depreciation. And we'll find that this is also a tangible asset, but this time it is accumulated depreciation. It's a sub-account of plant and machinery top account. And now we can save, we go back to our chart of accounts, and we've got the accounts that we want. We're now going to record the purchase of our piece of plant and machinery. We're an engineering company and we're buying a drilling machine. The supplier is a new supplier for us, it's called Bits and Pieces. So we add Bits and Pieces as a supplier. We don't need any more information than just its name. We're going to put in the invoice number, and then we come down to category. And here we're looking for the plant and machinery cost account, which is the second one down. A description here needs to be very full and very accurate, very precise, because it's going to keep appearing in reports. So it's a drill machine, and we're saying it's the drill machine bought in August 2024. It cost £5,000, it's got VAT, and before we actually save, I would drag and drop the actual invoice into there, and then we can go and save and close, and we've recorded the purchase of our fixed asset. Let's take a second to look at our balance sheet. So here's our balance sheet, and the piece I'm circling is the legacy information. We're using the sample company in QuickBooks, so that's legacy information. But here, including a subtotal, is our plant and machinery, and the only transaction we have is the cost so far. The next step is to create our depreciation journal. So we go to journal entry and we simply post a journal. So debits first, and the debit account that we want to use will be depreciation expense. So we select it. Now this is the clever bit, using QuickBooks as a calculator. Our cost was £5,000. We're writing this off over 4 years. So we divide 5,000 by 48, and that's the monthly depreciation. We put a sensible description in. And now I press Tab, and eventually I will come round to row 2. And I can do the credit side of my journal. And we select plant and machinery depreciation. It auto fills the credit and the description, and now we can save. The final step is to make our journal a recurring journal. At the bottom we click on Make Recurring. This creates a template, so we give our template once again a sensible name, and it's to do with August drilling machine. And then we schedule it so that every month, on the first day of the month, starting today and ending after 47, I'm writing in there, after 47 occurrences, that's our recurring journal. We can then go and check that we've done our job well, because we go to the company cog, we select recurring journals, and here's a list of all the recurring journals, and that's the recurring journal that we just created. Let's take a look at what we've done in a couple of reports. So I'm going to do the balance sheet. I'm going to customize it to take out foreign exchange gains and losses that don't need to be there, and I'm going to make the negative numbers red and in brackets so they stand out. And here we can see our plant and machinery set of accounts. That's the net book value, and we've got the cost and we've got the depreciation. If we click on the net book value, we drill further down and we can see the two component parts of fixed assets and depreciation with some sensible descriptions. And if you remember, we've got the name of our supplier, Bits and Pieces. On the P&L side, I'm going to run the profit and loss by month. Here we go. And our journal went through in August, so that's the one. So let's have a click on that. And we can see that in depreciation expense for August, we have our journal entry. Let's take one more look at our balance sheet, and we'll click on our net book value. We can see the £5,000 cost, but only one depreciation journal. But every month, on the first of the month, we'll get another journal and another journal and another journal, all the way through until 47. Without having to do anything, our depreciation is calculated for us.